The tech world just moves so fast, doesn't it? Like you hear buzz about a company and then boom, they're all over the news. Right now, it really feels like Palantir.
Oh, absolutely. There's been a ton of noise around Palantir, especially this May. And a lot of it's focused on the stock, where it's going.
Right. So for this deep dive, we've got some interesting angles. We've looked at Motley Fool articles digging into the stock's recent climb and what might happen next.
Yeah, and there's that potential Trump-Saudi Arabia deal angle, too, which adds another layer.
Exactly. Plus, we're tackling that huge question. Could Palantir actually hit $1 trillion market cap by 2030? And we saw a YouTube analysis, pretty bullish, calling them a key AI winner.
It's definitely a mix. You've got real optimism clashing with some, let's say, more cautious views.
So our mission today is really to cut through that noise, get to the core drivers behind what's happening with Palantir, and give you a clearer picture of what analysts are actually saying.
Sounds good. Where should we start? The stock performance.
Let's do that. Yeah. I mean, the stock has been soaring, hit all-time highs in May 2025. We noted $130.12 on May 14th.
Yeah.
What's really fueling that climb?
Well, the big thing is that their revenue growth seems to be speeding up.
Okay.
Q1 2025 saw 39% year-over-year growth.
Okay.
Which is actually up from the 36% they posted in Q4 2024. So it's not just growing, it's accelerating.
And that acceleration, it's pretty much down to the AI revolution, right?
Yeah.
Governments, commercial clients, they're all spending more.
That's the main story, yes. Their early focus on AI is really bearing fruit now. You see it especially in their U.S. commercial revenue.
How so?
That segment grew 71% year over year. 71%, that's a huge jump and shows businesses are really buying in.
Why?
And they're closing big deals, too. The last quarter, they reported closing 31 deals worth $10 million or more each.
31 $10 million deals. That's significant scale.
Exactly. It shows large organizations are seeing real value.
Okay, strong performance then. Let's look at the bulls. Their YouTube analysts calling Palantir a real AI winner. What's the thinking there?
Yeah. It really comes down to Palantir being early and heavily invested in AI. This analyst thinks Palantir is involved in, the vast majority, maybe 75–80% of the big enterprise AI deals happening now.
Really? That many?
That's the claim, with contracts typically in the $3 to $5 million range initially, but many potentially hitting 8 figures over, say, 2 or 3 years. They see Palantir's tech as crucial for real-time monitoring and AI-driven decisions.
And it's not just government work driving this anymore. Clearly, the commercial side is a big part of the story now.
Absolutely. Industries like insurance, retail, transportation, logistics, they're all adopting Palantir's platform. It's good at breaking down data silos,
Makes sense.
And their algorithms provide unique insights. One report mentioned they hit 554 enterprise customers recently. That's up 42% year over year. So commercial adoption is definitely a key driver.
Okay. But whenever a stock runs up this fast, you have to talk valuation. The Motley Fool pieces called it an extreme premium, pointing to a price-to-sales ratio of 94. What does PS94 actually mean?
It means the market values the company at 94 times its yearly sales, which is high, very high for enterprise software. It signals massive expectations for future growth.
Extremely high expectations.
Right. The bear argument is that maybe those expectations are too high.
So even if Palantir keeps growing fast, like that 39% rate.
Exactly. Even if they maintain 39% growth for 5 years and get profit margins like Adobe, which are excellent, around 36%, their future PE ratio, price to earnings, might still be around 60. And a PE of 60, historically, isn't considered cheap.
Right. So they don't just need to keep growing fast. They might need to grow even faster as they get bigger, just to justify today's price. Some are calling it wildly overvalued.
That's the essence of the risk argument. That PS of 94 is seen by some as dangerous territory.
And what about that $1 trillion market cap by 2030? Seems ambitious.
Very ambitious. Skeptics point out that even if you model, say, 50% average annual revenue growth, which is huge, and maybe 40% operating margins.
Those are also very strong assumptions.
Very strong. Even then, the earnings multiple needed to reach $1 trillion looks incredibly high. Plus, look at the current PE ratio over 500. That's another sign the valuation might be stretched, The math looks tough.
Okay, let's switch gears slightly. That potential Trump-Saudi Arabia deal. How does Palantir fit into that? It seemed to give the stock a lift.
Yeah, it did. So reports suggested a possible deal giving Saudi Arabia more access to U.S. AI chips. Now, importantly, it's about the chips themselves, not Palantir directly. But the market reads it as a signal that maybe a Trump administration would be more open to letting Middle Eastern nations access sensitive tech and related services.
Services. And Palantir, with all their security and data management expertise,
Yeah,
they'd be right there.
precisely. That's the thinking. And Palantir CEO Alex Karp being seen in Saudi Arabia with other tech leaders just fuels that speculation.
Makes sense.
Plus, any deal like this would almost certainly need strong security provisions, controlling access, monitoring data centers. That's Palantir's bread and butter. So while they're not in the chip deal, they could be a major beneficiary if that door opens wider.
So let's try and pull this together. On one hand, you've got really strong momentum, rapid AI-driven growth, huge gains in the U.S. commercial space,
Yeah.
and maybe new geopolitical opportunities opening up.
Yep, that's the bullish case in a nutshell. Real potential there.
But on the other hand, you have these serious valuation concerns. The metrics, PS, PE, they look sky high, suggesting the market is pricing in perfection, maybe even more than perfection, for years to come.
Exactly, and that's the core tension. Analysts are split. Some see the tech, the AI position, and they're all in. Others look at the stock price and say, whoa, hold on.
So for you, the listener, the takeaway is this. Palantir's got a powerful growth story, no doubt, especially with AI. That comes wrapped in a very, very high valuation.
Which means significant risk. You have to balance that exciting potential against the chance the stock would pull back sharply if growth doesn't meet these incredibly high expectations.
It really forces you to think about your own risk tolerance, doesn't it? How much are you willing to bet on sustained exceptional performance?
Absolutely.
So wrapping up our deep dive on Palantir in May 2025, we've seen the impressive AI-fueled growth, touched on potential geopolitical tailwinds, but also spent time on that intense valuation debate.
Those are definitely the key pieces to watch going forward.
Which leaves us with a final thought for you to chew on. Thinking about the next 12, 18 months, what would actually be the bigger surprise for Palantir? Would be seeing the company continue this exponential growth and actually justify this valuation? Or would it be seeing a major correction, bringing the stocks back down to more conventional levels, something to really ponder?